Welcome, everyone, and joining us on our live sharing class for the day. I'm personally very honored to meet you all here again. So, thank you for your continuous support. Today, we have more people joining our live sharing sessions. So, a warm welcome to all of our new friends. I am truly honored to share more knowledge with everyone and to share my experiences and insight from all these years with everyone here. Now, of course, I hope that everyone will learn something by the end of my session. Now, before we start, I just wanted to do a quick reminder for those that attended last class about screenshotting this live broadcast and sending it to my assistant. Now, we will do a more detailed lucky draw refresher later on. So if you missed it last time, here's your chance now. So, firstly, let me tell you that today we have very important topics that I want to share with everyone. You should all know that due to global economic issues and tensions in the Middle East recently, the profitability of the stock market has not been very good. Now, despite some short term rebounds, so in the current market, there are better stock. Are there people always ask, are there better stocks to make money? And who is making a lot of money in this market right now? Now, of course, these are questions that many people often ask me through private messages. Later, I will share some content on this topic with you all. So, without further ado, let's see what we will be sharing today. So, tonight we have a bit more to share with everyone. So, on one hand, we will share as usual, and then on the other hand, we will provide deeper answers to questions raised by people yesterday. Now, of course, I hope everybody here can learn more knowledge and skills through our live sharing classes. So, today's sharing mainly includes the following contents. We will do a review and analysis of today's market, international and domestic financial or major news events, and what kind of stocks can rise independently in this market adjustment process without being affected by the market adjustments. So, pretty much self sustaining stocks. Moreover, who can profit more through this type of stock? Now, as by many of the members here's request, there will be more content related to the Dow theory. Now, I won't list them all here. Anyway, we will share one question at a time. So we're going to take it slowly. If you have any questions and I am unable to respond here, you can always send me a private message after our sharing session or reach out to my assistant and I will make sure to schedule time to answer everyone's questions one by one. So first, let's review the overall market situation today for the Nifty 50 and the Sensex. So first, let's review the overall situation of the market today. So today, the Indian stock market index has risen for 3 consecutive trading days. As of the close, the Nifty index rose by 31.60 points, or about 0.14%, to 22,368 points. Now, approximately 2,224 stocks rose, about 1,450 stocks fell, and then 109 stocks remained unchanged. Now, among them, healthcare, metals, oil and gas, and energy fell between 0.3 to 0.8%, while fast moving consumer goods, power, IT, real estate, and automobiles all rose by 0.4 to about 2%. Now, looking at the Nifty index, the range of fluctuations in the first time period in the morning determine the amplitude of fluctuations throughout the day. Basically, it can be said that after the first hour of trading, the Nifty index remained in this range and then fluctuated. So, apart from this, there was no directional guidance provided. Overall, the index is still in an upward channel. The current price is close to the midpoint of the upward channel. There may be some pressure near the midpoint, but the overall trend in the near term is relatively optimistic. In terms of trading strategy, as the saying goes, stocks can be bought and trades can be made. but one must be careful and cautious in managing finances. So one must never trade stocks recklessly. Okay, jumping into our Sensex now. So let's take a look at the Sensex. The index rose by 89.83 points today, which is about 0.12% to 73,738.45 points. In the terms of trend direction, the Sensex index is basically in line with the Nifty, but there are still slight differences in the details. So for example, in terms of trends, the Sensex index is currently within a major upward trend line, nested within a small upward channel that has been in place since last December. You should be able to clearly see in the chart that I've marked it with a yellow upward trend line to differentiate. You can see that over here at the end on the right side of the chart. Now, there's not much to say about the current market situation. The upper channel is holding up well. And in these 3 trading days, the market has seen continuous rebounds. The trend on these rebounds have already been established. So how long will this rebound trend last? So I'll tell you, it will continue until the rhythm changes. That's all for today's about the stock market indices. Next, we will share content on another aspect. So now we will continue to focus on macroeconomic data as well as some major international and domestic news. In fact, many people may not realize the importance of this aspect, but it may be very important and it can help us forecast. Now, I won't explain the reasons too much more. Just remember that this is macroeconomic news is just as important as technical analysis. The difference lies in how investors interpret economic news and its data. The same data or news may be viewed differently by different people, and whether it is right or wrong can only be judged by the actual market trends. So how can we improve our accurate interpretation of macroeconomic news? Only by continuous learning and accumulating our own experiences can we enhance our comprehensive judgment ability. Okay, so first piece of news. Recently, apart from the conflicts in the Middle East, the monetary policy of the Federal Reserve, the fourth quarter earnings situation, which is influencing the market for us in India, the biggest event is the ongoing general elections, which will also profoundly impact the direction of the stock market. As voters prepare to vote in the upcoming elections to determine India's leadership position for the next 5 years, market observers often look for clues on how the results might affect sentiment. So history tells us that the election results can significantly impact market trends. Now, for example, in 2004, after the Indian Party lost power, the market declined. And then in 2009, when Congress regained power, the index soared. Similarly, in 2014, expectations of Modi's leadership led to a market rebound before the election. The latest report from the global research and brokerage firm Bernstein shows that there may be adjustments in Indian stock market after the results of the lower house elections in 2024 are announced. Bernstein's report states, amidst the noise of the newsrooms, we seem to have lost sight of the ground reality in many states. For example, the states of Gujarat and Rajasthan are facing unrest from different communities. The report mentions that while Punjab and Haryana have seen farmer unrest, the arrest of the Delhi Chief Minister Arvind Kejriwal has caused ripples in the capital. Although we cannot predict the outcome of the Indian election in advance, it is almost certain that the elections will have a significant impact on the stock market. So before we can anticipate the direction of market fluctuations, we can anticipate the likelihood of market volatility will increase. Shouldn't we be more cautious in handling our trades? My friends, what do you think? Okay, so a little bit more news in regards to the war. Now, just now I mentioned the issue of the Middle East conflict with everyone. The conflict in the Middle East has been ongoing for a long time now. So, for example, the conflict in the Gaza Strip has been ongoing since last year and has not completely stopped until now. Recently, what has intensified the conflict in the region is the new conflict between Iran and Israel. Now, in fact, from the perspective of the global stock market, the declines of the past week were mostly triggered by this event. The tension between Iran and Israel has always existed, and such regional tensions can have a certain impact on the global stock market. For example, geopolitical tensions often trigger investors' risk aversion, causing them to turn to relatively safe assets such as gold and government bonds. Now, this situation may lead to reduced market liquidity and falling stock prices. The trend of global markets last week has fully illustrated this point. In recent days, the situation seems to have eased, but it cannot be denied that the possibility of both countries completely abstraining is still there. Once new conflicts arise, the specific impact will depend on the severity of the conflict, the reaction of the international community, and other global economic factors. Overall, conflicts like this have a negative impact on the stock market and will definitely affect the volatility of the global stock market. I believe everyone still remembers the market trends of the past weeks vividly. Now, since the Middle East conflict has begun to affect the profitability of our stock trading, shouldn't we be a little bit more cautious in the process? Friends, do you think we should pay more attention to risk control? So, how do we control it? As long as we stay in the market, managing risk through capital management or controlling positions in an effective method. So, here's a new question, just like a friend asked me yesterday as well. Despite the overall market adjustment process, there are still some stocks that are very strong and have not been affected by the market adjustment at all. Instead, they continue to rise sharply. What is the situation with these types of stocks? What are their characteristics and what kind of traders will profit from them? So next, we will provide you with a slightly detailed introduction. Would everybody here like to hear it? So now I'm going to talk about the stocks that are not affected by the news or any other macroeconomics factor. These are what I call self-sustaining stocks. Now, most members are asking, when will we recommend this type of stock? Now, most of these type of stocks require mutual cooperation between institutions to undertake the distribution of shares. We are currently negotiating to acquire these shares. The current wealth growth plan is still in its early stages, so I am also negotiating with many institutions. But the results will be available soon, so please stay tuned. All right, everyone, let's take a look at what kind of stocks can rise independently without being affected by the overall market adjustment. Now, this was a question that a member just raised yesterday, and this question is very representative. For ordinary investors, you can buy it. Basically means you're gonna make money. The chances of making a profit are very high, and the profit margin is also relatively large. So let's take a look at this chart. This is a chart I shared with you last night as an example. We can clearly see that the chart that although in the recent period, especially last week, the Indian stock market experienced a significant adjustment, with the index falling about 3% in 3 trading days. The adjustment was huge, but when we look at this stock, this was not affected at all. Instead, it went against the trend and continue to rise without any consolidation in between. So some people say that if you can buy the stock in advance or buy it in its early stages of its rise, then it's basically making money effortlessly. That is definitely true. How can you not make money with such a stock? So what is the idea behind with this stock? So first of all, let's not mind what this stock is called or what its fundamentals are. The fact is that the stock is rising strongly despite everything that's going on. So as we all know, in the stock trading market, there are only two parties, buyers and sellers. When the strength of buyer exceeds that of the sellers, the stock prices rise. When the strength of buyers is less than the seller, the stock price falls. Okay, so does everybody agree on this point? From the trend of the stock, we can clearly see that the strength of buyers is definitely much greater than that of the sellers. So who has such great strength? Who is the mastermind behind the stock? Is it the people sitting here? I can tell you one thing for sure. The only ones who can drive a stock to rise like this are institutional investors. Individual investors cannot do it, or at least not in the current market regulations and conditions, no matter how much money you have. Now, so how can individual investors make such profits? This is a question for you all to think about. Now, let's take another case as an example. Now, this stock is called Halder, Halder. I'm not telling you all the name of these stocks so that you could rush to buy tomorrow. So please pay attention. We're just using as a case for analysis, and I can tell you very clearly that ordinary individual investors find it very hard to capture such profits. Now, this stock is also very strong. It hasn't been affected by any recent market adjustment. On the contrary, it's been rallying strongly. Stocks like this don't need to rely on their fundamental information, such as what industry they belong to, how their basic profitability is, or their ranking within the industry. Why? Because it's entirely driven by funds. Remember, funds are always the most direct driving force behind stock price increases. So who can do this? We've got to think about this. Can ordinary individuals, investors do this? Definitely not. Only institutional investors have the capabilities of doing this. So we just talked about the issue of funds, and you can clearly see that from the volume of this graph that it has been gradually increasing from the beginning of the rise until now. Now, this clearly indicates that funds are pushing it. For individual investors, it's indeed profitable to buy such stocks. Even if you only make a portion of the profit, it's enough. Because the profit doesn't have to be large. What's important is consistent profitability. So even if you make a 5% profit one time, after about 20 times, you can make it 100% of profit. And that's not even considering compounding interest. Can everyone here understand this point? So are these kinds of strong rising stocks the strongest trends in the market? If you think this is the strongest trend in the market, then you're underestimating the power of institutional funds. Now, this is another topic. We're not going to be discussing it for now. We've been talking about how institutional investors can start such trends and harvest these large profits. So how do they do it? What advantages do they have, or what are the differences between them and the individual investors? So I'm going to talk here a little bit about the advantages of the institutional investor. When it comes to institutional investors, because our company itself is an institutional investor, we can be considered industry insiders in this regard. The content I'm going to share with you today is not industry secrets or company proprietary information, so I can still share some information with you in a brief manner. So what are the advantages of these institutional investors compared to the individual investors? So the first difference lies in the advantage of professional knowledge and resources. Institutional investors typically have more professional knowledge and resources, including analysis teams, advanced technology, and substantial funds, allowing them to conduct market analysis and investment decisions more effectively. Individual investors, on the other hand, vary in quality. Therefore, I want to emphasize again here that if you want to make money in the market or make money with our company, you must have a good execution. Without good execution, even the best profit opportunities cannot be seized. Furthermore, in terms of fund scale, institutional investors have also an absolute advantage. Institutional investors usually have a large scale funds, which enables them to obtain better trade execution prices and low trading costs through economies on scale. Now, additionally, institutional investors typically have professional asset management teams responsible for managing investment portfolios, allowing them to formulate more complex and comprehensive investment strategies based on investment objectives and risk preferences. This is something individual investors cannot achieve. The advantage of institutional investors also include broader investment opportunities. Due to having more funds and resources, institutional investors can typically access a wider range of investment markets and asset classes, including private equity, commodities, and alternative investments, among others. Information advantage is also one of the advantages of institutional investors. Institutional investors generally have closer connections with listed companies than the retail investors, allowing them to access information faster and in greater quantity. As an institution, all these advantages can be translated into a guarantee of trading profits, thereby placing oneself in an unbeatable position. Now, in contrast to institutional investors, there are the individual investors. Now, of course, individual investors also have their own advantages and disadvantages. The advantages of individual investors usually manifest as greater flexibility, enabling them to make quick decisions and adjust their investment portfolios flexibly according to market conditions. However, the disadvantages of individual investors are also quite apparent. Now, for example, individual investors lack professional knowledge and resources compared to institutional investors. Individual investors may lack professional knowledge and resources, putting them at a disadvantage in market analysis and in investment decision making. Secondly, individual investors may be more susceptible to emotional influences, such as fear and greed, leading to emotion-driven investment decisions, whereas the institutional investors generously have a rigorous risk control system in place. Furthermore, individual investors typically cannot enjoy the economies on scale that institutional investors have, potentially facing higher trading costs and poor execution prices. Now, at this point, some people here may ask, since you guys are an institutional investors, why can't you recommend strong stocks for us so that we can earn more profits? Now, although we are also just an institutional investors, for trading certain stocks or major actions, we often cooperate with other institutions. Only through cooperation can we achieve mutual benefits. And as I mentioned earlier, now that I have returned to India, we will embark on larger actions. Currently, I am also in discussing with several other institutions for cooperations, including our upcoming wealth growth plan. Once our wealth plan is launched, there will definitely be more profit trading opportunities. The cooperation with other institutions is still underway, and I will naturally announce it to everyone as progress is made. Okay, so here is the refresher for the lucky draw for those that have just joined in. So without going into too much detail on the other aspects, our company is about to fully enter the Indian market. The work has been fully launched to quickly increase our market share in India and generate more of the company's outreach. Also, to express gratitude for the strong support from our Indian fan base and members, we have launched the online live investor education platform, as well as introducing this gratitude lucky draw to show our appreciation for everyone's long-term support and trust. Now, the schedule for this draw is April 21st, 2024 until April 26th, 2024. So today we have also welcomed many new members. People who have not yet participated in the lucky draw activity can send screenshots of attending the class to my assistant, fill out the survey, and participate in this round of lucky draw. Now, due to the limited number of prizes in this draw, it will be a first come, first served basis. The draw will be conducted under the supervision of the notary office. We are steadily progressing with this work and believe that the announcement of the winners will be made very soon. Now, the list of winners will be notified to everyone promptly. I would like to mention that all prizes will be arranged to be delivered to you all. Just remember one thing: winners only need to wait for the prizes to be delivered. All costs will be responsible by our company's headquarters, so there will be no cost incurred by anyone. Please rest assured about this. Now, since we have already started fully entering the Indian market, the lucky draw for everyone is simply a token of appreciation for the support you have shown us. In the future, we will launch a series of activities to let everyone truly experience our company's first-class service and be able to earn more profits. This includes our upcoming wealth growth plan, so please stay tuned. Now, the first step of our ambitious plan is to enter the Indian market has already begun. Those participating in the live lucky draw, please contact my assistant promptly with the Photoshop of the photo of the live sharing class. Okay, so on to our analytic lesson for this evening. On Sunday, I shared some content on the Dow theory with everyone. So I also mentioned then that the content of the Dow's theory is vast and profound. It cannot be fully explained in one sharing or even two sharings. Now, even some other practical tactics have been derived from the Dow's theory. Of course, I will share all these contents with everyone in the future. Today, we will continue to share some more content about Dow's theory with everyone. I also hope that after I finish sharing, everyone can actively and study on their own. Now, because only through studying more and practicing more can one improve oneself quickly. All right, so without further delays, let's continue sharing the following content. So welcome back to another series of the Dow. With the request on high volume in regards to the Dow theory content, we're going to do this part 2 to go over more material. So a quick recap of last lesson, we went over what the Dow theory is. We also introduced the creator of this theory, Charles Dow, and we learned about the basic foundation of the technical analysis and what the Dow theory have evolved into now. If you want to go back and get these previous lessons, feel free to grab a copy from the assistant. You can do a review on the market trends as well as the phases each trend goes through. Now, on to the first part. So let's talk about the advantages of the Dow theory. Now, there are 3 major advantages of the Dow theory, so let's get through them one by one. The first one we have is long-term perspective. Now, the Dow theory is based on long-term market trends. It can provide investors with a big picture view of the market movements. It can also help investors avoid knee-jerk reactions to short-term market fluctuations and focus on long-term growth potential. The second one we have is it's easy to understand. The theory is based on simple principles. The theory provides clear guidelines on how to identify market trends, and it can be a useful tool for investors looking to better understand the market behavior. Now, the last advantage we have is follow market trends. The Dow process is based on the idea that the market is always right, and it helps investors follow the current trend by identifying the trend. Investors can make better decisions about when to buy and sell securities. Okay, time to introduce one of the easiest indicators to keep an eye out for. So, like in the candlesticks, there are a few important patterns in the Dow theory as well. One of the Dow process patterns is the double down and double top formation. A double top and bottom are recognized as reversal patterns in Dow Jones trading. A double bottom takes place when a stock's price reaches a modest low and promptly bounces back with a rapid recovery. Subsequent to the price rebound, the stock sustains trading at an elevated level in relation to its initial low for a minimum of 2 weeks. With well-distributed intervals following this period, the stock makes an attempt to return to the previously established low. If the stock successfully holds its ground, experiences another rebound, then a double bottom pattern emerges. The formation of a double bottom is perceived as a bullish signal, indicating potential buying opportunities. Now let's have a look at the Dow's theory chart to understand this pattern. Now the double top would basically be the same graph flipped upside down and heading towards a bearish trend. So take a look at this graph that we have here. You're going to notice it sort of makes like a W shape. At the bottom of each, we see long shadows of the doji. So that is when there's two of them, we call that the double bottom. Now observe the temporal gap between the formations of the two bottom patterns. The pricing levels were distinctively spread out over time. So after that second low, it rebounded back up for a new high. Okay, so up next, we have the Dow theory trading strategy. Now, the Dow theory trading strategy is based on principles outlined in the Dow theory. It emphasizes the importance of trend stocks analysis in making investment decisions. Here are the key steps involving in using the Dow theory in trading. Now, there are 6 important steps, and we will go over each and one of these one by one. So the first one, step 1, we have identify the primary trend. Then we go to step 2, we got to confirm the trend. Then number 3, we identify secondary trends. And then step 4, we look for trend reversals. Step number 5, we apply the Dow theory analysis. And then lastly, step 6, we implement risk management. Now, implementing risk management is going to fall in almost every category. Okay, jumping in, we are going to go with step 1, identify the primary trend. Now, the first step in the Dow theory trading strategy is to identify the primary trend of the market. This is done by analyzing the long-term price movements of the market, typically over a period of several months to years. If the market is moving consistently higher, it is said to be in an uptrend, while if it is constantly moving lower, it is in a downtrend. So you can see here, we have a little picture, the primary trend and market cycle. So the trend to seam is going up. That is the new trend. Now onto the right side, we have step 2, confirming the trend. Once the primary trend has been identified, the next step is to confirm it. This involves looking for other indicators, such as trading volume, to confirm the direction of the trend. In general, if the trading volume is increasing as the market moves in the direction of the trend, it is seen as a confirmation to the trend. Now you're going to see this little graph over here. We also, when you see this graph, normally at the bottom of this, you're going to see a volume indicator as well. So as every kind of spike that we go up, we should see an increase of volume at the bottom. So it should coincide with each other to give us that confirmation that we are indeed going on an uptrend. Okay, so we are going to be going over to step 3. Now, within the primary trend, there will be secondary trends that can provide opportunities for traders to enter or exit the market. Secondary trends are typically shorter term movements within the primary trend, lasting several weeks to a few months. So as you can see here on this graph, we have our original primary trend. It seems to be going up, but we also see a lot of oscillation going down. So that is what we're going to be considering our secondary trends. Onto the right side as well, for step number 4, we look for trend reversals. One of the key principles of the Dow Jones theory is that the trends tend to continue until there is evidence of a reversal. Traders using this strategy will look for signs that a trend is weakening or reversing, such as change in trading volume or a break in key support or resistance levels. So we haven't gone over much of support and resistance, but that being said, if our trend seems to be breaking all the other indicators and it's showing clear signs of a reversal, it can be time for a reversal. So that would implement that it's the end of our primary trend. So step number 5, we must use the Dow theory analysis. So technical stock analysis plays a key role in the Dow theory trading strategy. So traders will use charts and technical indicators to identify key support and resistance levels, trend lines, and other patterns that can provide insight into the direction of the market. So this is going to be a little bit more advanced. You would want to identify some key support and resistance levels on your charts. Maybe you would want another indicator, such as like an MACD. You would want other indicators to kind of confirm what you are looking at can be determined that we are hitting a reversal and entering into a new trend. So the advantage is the more we know, the better insight we will have. Now, step 6, implementing risk management. Now, this is very key. Risk management is going to play a huge role whether you are making money or you are losing money. You always have to set some boundaries on how much risk appetite you have. So as with any trading strategy, risk management is critical when using the Dow theory. Traders should set stop loss orders to limit their losses in the event the market moves against them. And they should use position sizing and other risk management techniques to manage their exposure on the market. Okay, so just now I continued to share some content about the Dow theory with everyone. Of course, I have mentioned that even though we are sharing through these live broadcasts, the content I can share is far from enough to cover all the aspects of the Dow's theory. So if you want to delve deeper into this area, you want to understand it a little bit better, and you want to transform it into your own knowledge, you're going to need to spend even more time studying it yourself. It's going to take continuous study, and then you have to apply this into your everyday trading so you get used to what you're looking at. Again, most of the charts that we look at is the repetitive visuals. So in order for us to adapt better, for us to understand better, we have to take what we know and then we must practice. So now we're going to continue to track the stocks recommended to you earlier. So I'm going to get straight to our first stock analysis. Okay, so first of all, let's take a look at this stock that we recommended to you today, and it's called Cummins Sind. Now, Cummins India Limited is CIL, is a leading diesel engine manufacturer. The company is engaged in design, manufacturing, and distributions of all service engines and related technologies, including fuel system, control devices, air treatment, filtration, emission solution, and power generation system. So these guys are a big player in the engine manufacturing, right? Now, the company's business performance is excellent. It can be seen that in both its operating income, net profit, and EPS have steadily been increasing over the past few years. So right off the top, you're going to see I've circled the revenue. So as you can see, right after the pandemic in 2020, 2021 was obviously their lowest. But ever since then, we have hiked new revenue high targets, even that of 2019 and of 2020. Now, what can we see from these simple charts? At least we can see that the company's management or management level is quite stable. Now, additionally, the industry environment where the company operates and the internal and external operations or competition of the company are also quite stable. So this is particularly important for medium to long-term traders because as long as the company's operations are stable in all aspects, it means continued profit. So again, we're going to dive into the bottom left. You're going to see this net profit circled, right? So in 2021, right after the pandemic, we have gone net profit soaring above the year before. Now, if you can tell, the pandemic COVID-19 year, it was 583. The recovery year is always going to be the 2021. And even then, we almost tied its net profit right after the pandemic. Earnings per share, the EPS, the levels, same thing. After 2021, we continuously hit new highs. These are all good signs, and these are what we always tend to look for when we are buying stocks and like diving into companies. So since the company's operations are stable, its stock performance has been steadily rising. The stock begins to the category of long-term bull stocks. What everyone's seeing here is only a fraction of the actual chart. Now, we can open the charts themselves to see a longer period. Now, it can be said that the pace and the trend of stocks rises are very, very stable. Recently, this stock has some obvious features. So first, when the overall market was adjusting, the company's stock price did not decline. It only oscillated at a higher level for 6 trading days. And it was a sideways oscillation itself is a sign of strength. So you always keep that in mind. When it oscillates sideways after a long climb, it shows really strong strength, that it's not getting pulled down. Now, on the other hand, this morning, the stock opened with a gap up and once again hit a historical high. its bullish trend is running well. Buying the company stocks carries very little risk, and from a longer term perspective, there is tremendous profit potential. So after buying the stock, everyone just needs to hold patiently. Now, if we talk about this graph, since the bottom of the blue arrow, you're gonna see we are continuously on a rise. We do a gap up, we continue to oscillate on an upward trend, and then we start the day fresh with another gap up and just sideways oscillation. Sideways oscillation is always steady. It's a steady market. So nothing crazy. We haven't gone in a downward trend whatsoever. This is what we like. Now, Redington is the stock next that we're going to be talking about. So from a fundamental perspective, this stock has excellent performance. So with annual growth in revenue and net profit, we can see this to be an excellent company. And it continues to rise against the overall downturn in the IT industry. Now, the IT industry has been a little bit tough, right? A lot of ITs are quite volatile. So this is the kind of stock that makes it like a gem in this entire industry. So technically, we can say in confidence, this tends to be in a long-term bull market. So it's breaking through the large oscillation range of 210 to 200 on the weekly chart. Now, currently the stock price is at a higher level and it's undergoing oscillations, not even considered a correction. So this has never even considered to be going into a correction. Now, of course, those of you who do not have the stock for now should refrain from buying it because the stock, not because the stock is bad, but because of the short-term volatility, there's no need to repeatedly invest funds in the stock. Now, I'm going to be diving into our chart here a little bit. So you're going to see this one black line, and then you're going to see from where I wrote the Redington, this is where it begins for the non-correction. So we can see it going up, and then we come back down a little bit, and then right away we just rebound back up, and each time we peak a little bit higher. So oscillate, like we're breaking through all the large oscillations each time on this stock. So every time we oscillate, every time we hit it down, it always continues to go back up. That is why I draw a diagonal line all the way going up. All right, everyone, that is all for today's online course. Now, regarding the Dow theory and the analysis of some individual stocks, you can understand and digest these things for a little bit. Now, our next online live broadcast is scheduled for Tuesday, April 25th at 8 p.m. I hope to see everybody there again. I just want to do a quick reminder. Thank you very much to my friends for all your strong support. Please remember to take screenshots of the lesson, complete the questionnaire at the end later, and then find an assistant to enter the draw. Now, we've said this last class, so this is going to be for the people that are new that joined today. The next class is going to be the last class before the end of the draw, which is going to be on April 26th. So best of luck to you all. Thank you again for your support, and then I'll see you all next time.